Hey everybody, Smart Silver Stacker here. I think now is a good time to make a video to provide some information for new gold and silver stackers, for anyone who is just getting started with investing in physical precious metals, because right now there actually aren't too many people getting started stacking gold and silver. If you go to most coin shops, you'll find that at the moment they've got more customers trying to unload their gold and silver then they have customers buying it. But these things are cyclical, they're bound to change, and given the persistent devaluation of the US dollar, which doesn't look like it is going to stop anytime soon, I suspect that a new wave of stackers will be entering the market in short order, and if you are one of them, then this video is for you. Now, this video isn't going to be the very basics like what is a silver bar, what's the difference between a coin and a round. It's not that there's anything wrong with that, it's just that it's been covered before. Instead, I'm going to give you some insight from someone who has been stacking for a while, things I wish that someone would have told me when I was getting started stacking, and some important factors to consider before you ever buy your first silver coin or your first gold bar. And these are things that you might otherwise overlook when getting started, or at least it's hopefully going to be some information that can help you and guide some of your decision making when you are beginning. And if you're a seasoned stacker, you can stick around too. There could be some value in this one for you as well. So the first question that you might want to consider as a new stacker is when to buy and when to sell your gold and your silver.
I gotta get Wilson and tell him to sell!
And of course, there's always the old adage, buy low and sell high. And of course, that certainly sounds like a good plan, but there is a bit more to it than that. And as I mentioned a moment ago, gold, just last week, it broke out to a new all-time record high. Although since then, it has pulled back a bit. And silver, well, silver, true to form, it's been a volatile ride with lots of up and downs. But it's still up more than 15% year to date at the time that I am recording this video. And based on the fact that the Federal Reserve is widely anticipated to begin cutting rates as early as this September, which means a return to easy money and more cash flowing around the system, I think that the long-term prospects for both precious metals are excellent. And when it comes to buying low, now is actually a chance to pick up physical bullion at cheap prices. Gold and silver have both corrected off of their recent highs, and you can pick up physical bullion for a very low premium over spot right now. That's actually the result of all the physical bullion selling that we have been seeing. If you're not familiar with spot price or premiums, just in a nutshell, the spot price is the price of a paper contract for gold or silver on a futures exchange such as the COMEX. And premium is the amount over that spot price that you pay for physical bullion, whether it be coins, bars, or rounds. To give you an example of how there are some nice deals available right now, I recently picked up this MS65 St. Gaudens 1924 gold double eagle for about 6% over spot price from SD Bullion. Now, normally I don't bother with graded coins, slabbed coins, potentially numismatic coins, but 6% over spot is a much lower premium than these pre-1933 gold coins typically carry, especially for a graded and slabbed coin. I even asked the team over at SD Bullion what was going on with the plunging premiums on pre-1933 gold coins, and this is what they had to say. As the spot price of gold has risen significantly over the course of this year, we've seen premiums drop across the board. The premium difference between different lower-tier generic coins, both in circulated grades and lower mint state grades, has also shrunk. This presents fantastic opportunities for buyers as they can purchase a certified MS62 or MS63 coin for not much more than a raw BU coin. Premiums on higher grade MS64 and MS65 graded coins have also fallen as gold has risen, making these very attractive deals. So that is the word on the street from SD Bullion, and while gold is trading still near record high prices, there are deals out there. And one thing I like to think about when it comes to buying and selling metals is rather than just buy low and sell high, I like to take the contrarian stance and buy what others are selling. The inverse of that approach, of course, is that you might consider selling some of your metals when suddenly everyone is buying. And an example of that is what occurred during the regional banking crisis back in March of 2023. When that episode kicked off with the failure of Silicon Valley Bank, there was a huge influx of demand for physical gold and silver bullion. The spot price of the metals, that's again the paper price on a paper exchange, it didn't react nearly as much as the price of physical coins, bars, and rounds as investors rushed to get tangible assets outside of the banking system. Premiums on physical metal, they exploded at that time, and for the most part, if you were selling to a coin dealer, you could be selling your bullion for well over the spot price. That's how strong the demand was for physical metal. It's almost like the physical market and the paper market completely diverged for a time. And I can remember at the height of that panic, SD Bullion was paying over spot even for 100-ounce generic silver bars. Now, that is almost unheard of that you might get more than spot for a 100-ounce bar. If you're new to stacking, just so you know, big bars like that, they typically carry the lowest premium of just about any bullion. And when you go to buy them, usually you're paying close to spot. So the fact that when you're selling them to a dealer, they were paying over spot, that was a sign of how tight the supply for physical metal was at that particular time. Now, U.S. Silver Eagles, these are the official silver bullion coin of the United States. And back in March of 2023, during that physical bullion squeeze, when there was all that demand, these were actually selling for nearly a 100% markup over the spot price, right? Twice the spot price. That's what a Silver Eagle would cost you at that time. And I didn't personally take advantage of that, but I do know some stackers that did when they sold many of their Silver Eagles out of their stack, and then they just rolled that money right back into generic silver. And that actually significantly increased the number of physical ounces in the stack because they were getting such a high premium over the spot price when they sold their Silver Eagles. And in fact, if you had sold at the height of that panic, and then with the spot price being exactly the same, once the supply and demand issues for physical metal got squared away, you could just buy back into Silver Eagles. Eventually, the premiums did come down from that astronomical level, and you'd have more silver. So when everybody is panicking and buying metal, that's when you might want to consider lightening up. Now, listen, none of this is financial advice, and for the record, I personally have never sold a single ounce of physical metal. But if you're looking for a cue as to when to sell, that's a pretty good one when everybody else is buying. But right now, despite the recent run-up in the spot price, gold and silver remain some of the most undervalued assets on the planet. So for me, it makes sense to continue stacking them for the time being. And when that fact changes, the valuation of gold and silver, that is, that's when I'll think about selling. Now, one point to consider when looking for a good time to exit a position in the metals, physical or otherwise, is rather than looking at the gold price or the silver price in dollars, you might consider taking a look at their value relative to other assets. Now, to give you an example of what I'm talking about, we can take a look at the Dow to gold ratio. And this chart is simply a representation of the value of the Dow Jones Industrial Average divided by the price of gold at any given point in time. Now, today, this ratio sits at over 16, but it has been notably lower than that in the past, meaning gold has been much more valuable relative to paper assets at other times. For example, at the peak of the 2011 gold bull market, the Dow to gold ratio dipped beneath 7, and in 1980, the ratio dropped all the way down to 1.3, and then also back in 1933, at the height of the Depression, because of the devaluation of paper assets, it went as low as 1.94. Now, what this means is that right now, to buy a share of the Dow Jones Industrial Average, you would need more than 16 ounces of gold. But historically, there are times when you could buy a share of the Dow for less than 2 ounces of gold. So right now, gold is historically cheap relative to stock. But to be fair, the ratio has actually been higher than today as well. It's not at the highest point in history. During the dot-com bubble, the the ratio soared over 40, and that high did coincide with perhaps the biggest gold buying opportunity in living memory. The average gold price at that time in 1999 was $278 per ounce, compared to today's price of around $2,400. But enough about when to buy your gold and when to sell your silver. Those are really questions that you will ultimately need to answer for yourself. And look, none of this is financial advice. You got to make sure you do your own due diligence. But let's talk about some other factors to consider before you make that first bullion purchase. First of all, where are you going to keep your gold and your silver? That could mean buying a high quality safe. It could mean caching it somewhere, burying your gold or your silver in a secure location, or possibly you could use a service to store your metal for you securely. And there's a lot of private companies with a long history of safeguarding tangible assets like gold and silver. SD Bullion runs a program called SD Depository with very low fees, as low as $9.99 a month. Another service that I personally use for storage is that offered by the UPMA, or the United Precious Metals Association. You can actually get free storage for Goldbacks with your UPMA account. And if you're not familiar with Goldbacks, these are a physical gold legal tender currency. They're legal tender in 5 states. And I have several videos on the channel about them that you can check out. But when it comes to storage, one very handy feature with Goldbacks and the UPMA is that you can actually not only get free storage for your Goldbacks, and they'll send them to you whenever you want them, but you can also lease them to the UPMA, which does tie them up for a little bit. I mean, you got to check out the site for details, but in addition to storing them for free when you use a Goldback lease, the UPMA will actually pay you interest in Goldbacks in the range of 2 to 3.5%, and I do utilize that service myself. Regardless, though, of where you store your metals, one thing that you don't want to do is put your gold or your silver bullion in a safe deposit box at the bank. Now, maybe these boxes could be used for short-term storage during, a move or something along those lines, but there are some huge problems with trying to use them for long-term storage. The reason being that if a bank fails and it shuts its doors, you could just be out of luck when it comes to reclaiming the contents of your box. And just like we saw in March of 2023, when the banks start failing and confidence is lost in the system, that's exactly when you want your physical gold and your silver the most. So I would keep your bullion out of the banks. Another important consideration when you get started stacking is to track your purchases. Now, I don't hear this mentioned a lot. It's not exactly the fun side of stacking, but good record keeping can be very helpful. And how you do that, it's up to you. But at the very least, I would start an Excel or a Google spreadsheet to track what you bought, when you bought it, where you bought it from, and how much you paid for it. Because if you do this from the very start, it's going to be a lot easier than going back later and trying to track down receipts and remember where you bought all of your bullion. This will also help you to track your dollar cost average, and when it does come time to sell, it can be helpful for tax purposes. Not that I'm a tax professional or giving you any advice in that regard, except to say that good record keeping is much easier to achieve if you start sound practices from the very beginning. Finally, before you start stacking gold and silver, I do think it is important to ask yourself, why are you doing that? What are you stacking for? Because having a strategy ahead of time, that could influence what you focus on in your gold and your silver stack. Maybe you're simply looking for an inflation hedge or some kind of physical assets to hold outside of the financial system. Well, really, you won't go wrong with any gold or silver in that case, but I would say personally, I like to focus on whatever is lowest premium at any given time. Oftentimes that will mean silver bars are a good way to get the most metal for your money, or maybe you just want to keep it simple and focus on 1 or 2 sovereign coins, like the Canadian Maple Leaf, for example, or the US Silver Eagle if you want just the official bullion coin of the United States. But let's say perhaps you are a prepper stacker and you're getting ready for economic calamity. You want something to barter with. Well, in that case, junk silver, that is US 90% silver dimes, quarters, and half dollars, minted 1964 and earlier, that has always been the favorite among the SHTF economic collapse crowd. Or maybe you're a sound money advocate who thinks that we should vote with our own pocketbook and try to actually transact in physical metals. Well, in that case, Goldbacks would probably be the good choice because these are actually legal tender in 5 states. Currently, in the state of Utah, there are actually more businesses that accept Goldbacks. Remember, these are actually made out of gold than accept Bitcoin. So if you are a bit of an activist stacker and you really like the idea of sound money, these are definitely worth checking out. Or perhaps you simply want generational wealth that you can pass down to your descendants and you're not really concerned about selling the metal in your lifetime. Well, in that case, any form of physical gold and silver should fit the bill. And a good approach could be to just look for whatever happens to be on sale at any given time in the physical bullion market, such as the sharp decline that we have recently seen in premiums on pre-1933 gold. But look, whatever your motivations are to stack gold and silver, being explicit with it, having a strategy, setting some goals ahead of time, that can serve to keep you on the right path with your stacking. And one final tip for new stackers here. Don't go out and spend all your fiat currency on coins or bars or any kind of bullion in one shot. You want to keep some cash on hand. You need to have an emergency fund. You need to have some dry powder because, sure, the dollar is being devalued. I think we can all see that when we go to the store and we see the prices of things, but that's still how we pay our bills. And I have heard many stories in the stacking community of stackers being hit with unexpected expenses and then being forced to liquidate their precious metals at a time that is not of their choosing, simply because they need the money. Now, I would say don't let that be you. You want to be what we would call a strong hand, someone who can hold your metal for the long term. So it's very important not to overextend yourself. Now, I hope you found the information in this video to be helpful. If you did, do me a favor and click the like button down below, give the video a thumbs up, and if you'd like to see more videos about gold and silver, why not subscribe to the channel? Thanks for watching, everybody. Stay safe and happy stacking, and I'll catch you next time. Smart Silver Stacker, out.